Hello everyone, welcome to today's session where we are going to look at gold. So today we are only going to look at gold, where we had a strong rally to the downside, the phases we are having, and what we're expecting next. So one thing we can all appreciate on gold, or one thing we can all align, is that gold has been having an uptrend phase. So these are the phases that we have on gold so far. Gold had a strong rally to the upside, then a consolidation on the sideways, another strong rally to the upside, and again we can see another sideways to the another sideways in the market. So if we were to go with what is happening, then we might expect another rally to the upside. That is what gold is having. But again, for us to clearly say that we're expecting an uptrend to continue, we need to know the main reasons as to why we have been having this uptrend. So the reason we had this uptrend sideways, and again this other strong rally sideways, so that we can say, since the main reason as to why we had this rally are still there in the market, then we might expect the same or even the continuation to the upside to happen. So one thing we can also agree is that if we look at this phase and this phase, the sideways phase, we can say that during the current phase, we are having a strong bearish momentum compared to the previous one. So the previous one, we had some weak sells, as you can see. But with the current phase, we are having more of a strong sell candlesticks, strong bearish momentum, and that is what we had on Friday. So that is the phase that I want us to concentrate with, so that we can know if we are going to have a continuation to the upside or even a continuation to the downside. So this is the sideways phase that we're talking about, where we have this common demand area. Okay, so we have been talking of this common demand area here, and of course this common supply area on the upper side. So the common supply area on the upper side. So meaning, if we were to go with technicals, then we can say that from this point we should expect a push to the upside, because that is what we have been seeing on gold. So what I will say is that the main reason as to why we had this strong rally, for us to say that we'll expect that continuation of uptrend, there are majorly two. One of them is the global elections that we are having. So we know that this year, or even in the second half of this year, we have UK elections on 4th of July. We have that is the Europe area elections. Okay, we are also going to have US elections towards the end of this year. So we know, due to elections instabilities and all that, most investors prefer to invest in assets that won't be affected, one of them being gold. So that could be a reason as to why we have been seeing an uptrend on gold. And another reason, which is a major one, is the central banks. Okay, so how the central banks have been behaving, how the central banks have been taking buys. And we can see on these statements from investing.com. So the People's Bank of China reported no change to its gold holidays in May, in data released on holdings, in May, in data released on Friday. So marking an end to its 1.5 year long buying spree. So we have been having central banks that have been purchasing gold for the last 1.5 years, every month, increasing their reserves on gold. But on the month of May, that was last month, we saw the People's Bank of China, which has been more aggressive in buying gold, holding their reserves. So they didn't increase any reserves. They didn't have any more buys after 1.5 years. So that was one of the main reasons as to why the demand that was there on gold somehow did fade in the market. And on the same Friday that they released that data, you can see they released it on Friday. The same Friday they released that data, we had a very strong bearish momentum. I think it's one of the strongest momentum for a number of months that we have seen. Yes, we have had some bearish momentum here, but they were not strong as this one on Friday. So that was one of the key reasons as to why we had that bearish momentum. And since we are seeing this central bank somehow holding, then it means that bullish momentum might somehow fade away. Yet it's more of a mixed, where we still having elections, uncertainties on elections, and we are also, so the uncertainties on elections, they create demand for gold. But again, at this buying spree from central banks is again creating supply. So we are more in a mixed reaction of demand and supply on gold. So what I will say is that it's good we observe this area since it has some demand technically. So technically we have some demand here. Good, we obey it, meaning we might expect a retracement. But again, this retracement might not be aggressive as this one. So this push might not be aggressive as this one, since at this point we were still expecting that People's Bank of China will report more buys, but they didn't do that. So meaning we might have kind of a weak retracement, and then possibly we might start seeing gold pushing to the downside, probably targeting the levels of 2200. Okay, so that is one of the reasons as to why we are seeing now some strong bearish momentum, since some demand is getting away from the market. So another thing is that this week on Wednesday, we are going to have CPI. So it will be one of the busiest Wednesdays. We are going to have US CPI released the same day as the US Fed, the US interest rates. So this will be a busy day that tends to affect everything across the board. So on Wednesday will also be a key determinant if gold probably will push that further as we're expecting, or if gold will push to the upside. So as we know, the correlation between gold and dollar is that if the US dollar is strong, the push to the downside continues. And if the US dollar gets weak, the push to the upside continues. Okay? Although the correlation has not been that strong as historically we know, because during this strong rally, we can't say the US dollar was weak. No. So thank you and have a nice day and a profitable day ahead.